Hey everybody, I got a video on TikTok the other day, or a question on TikTok the other day. Never mind, I'm gonna start over. Hey everybody, so I got a question on TikTok recently asking if you can trade stocks as a side hustle, right? Like a side thing. And the goal is to make $1,000 per month with a $5,000 investment. Just as a hypothetical, I'm gonna run down two price points with multiple hypotheticals because you gotta cover everything. So let's say you have a goal of pulling in $1,000 extra per month as a swing trader. You're not going to be day trading, you're going to be swing trading. I want to walk you through two examples here with multiple examples within the example. It's super important as a trader to have goals, right? That's one of the things I talk about, is having a plan and sticking to your plan. So let's say in this example that we have found a stock that is $5 a share. And we've noticed that over the course of the last several months, this stock bounces between a trading range of $5 of support, it's being supported, and $5.30, it's resisting going above. So every time it gets to 5, it goes back up. Every time it hits 5.30, it meets resistance, it goes back down. Every time it hits support at 5, it goes back up. And it does this periodically over the course of, say, several days or weeks or longer, whatever. And we've noticed this pattern now happening over and over. Now, sooner or later, something's going to happen to this stock or the sector or whatever, markets in general, the economy, and this stock is going to break out either to the upside, it's going to break resistance and it's going to push above 530, or it's going to break out to the downside and it's going to break support and go lower. But until that happens, generally speaking, this stock bounces between a trading range of around 30 cents. Perfect for us to trade. We've got ourselves $5,000 and we will be purchasing 1,000 shares next time that stock gets to $5, right? So we notice it. By the time we notice the stock or we're paying attention to it, it's $5.20. Well, we're not going to buy here, right? Because we know it's at the top of its almost trading range. We're going to wait. So we start keeping an eye on the stock as it starts pulling back. And it maybe doesn't happen in one day. Maybe it takes several days or a week, whatever. And finally, gradually, it gets to support at $5. And that's where we enter. Now, there's a couple things to pay attention to here. One, I want to talk about this. I'm going to mention this a lot in this video. Don't be so literal. This is a huge problem for new traders, is that they hyper-focus on being like to the number literal. When you are that hyper-focused on exacting exact numbers, you're never going to make any trades. You're never going to get in and you're never going to get out, because nothing is as cut and dry literal as it will hit 5 and it will hit 5.30 and I will buy at the bottom and sell at the top every single time. It's not how this works. You can't be that literal or you will never make trades. We have to look at the news. We have to look at the relative strength index. If you don't know what I'm talking about, this is probably not the video for you. You want to go back and watch some of my other videos on the relative strength index, technical analysis, Bollinger Bands, breakout support and resistance, and then come back to this video. If this stock starts to drop, we want to be looking at relative strength. And we want to see where that stock is on the oversold level on relative strength. That's the bottom. Relative strength has two levels, right? It has overbought at the top and oversold on the bottom. When the stock gets oversold, it means it's likely that the stock might recover and turn around. It's not 100% guaranteed. Nothing in life is 100% guaranteed, right? But it's something that we're going to keep an eye on. So we notice that the stock is 520 and it's dipping, dropping. We're keeping an eye on it. We're not being hyper-focused and ultra-literal on this. And we notice that the stock is around $5 and let's say 6 cents. And we notice that it's now oversold. Are we going to be hyper-literal and get hung up over maybe $60? That's what we're talking about here. We're talking about $60. Are you going to miss out on this trade because you're being too literal? I have to get it at 5. I can't get in until it's 5, but it's $5.06. What is it going to cost you? Your investment is $5,060 versus $5,000, right? Remember what we're talking about here. It's peanuts here. It's $60 in the grand scheme, the big picture here. It's only $60. It's not worth getting so hung up and anxious over. No, it has to be 5. It has to be 5. I have to get it at the bottom. Now you've got options. Option 1 is it says it's oversold. It's $5.06. Do you want to buy it here, or do you want to be stubborn and hold out and get it closer to 5? Or do you want to start scaling in? You can buy a little at 506. You can buy half, for example. You buy half of your position at 506, and then you wait. If it keeps going lower, perfect. You get your other half at 5. If it doesn't, and it turns around and goes higher, well, at least you got some skin in the game, and now you have fewer shares than you were hoping, but you still are in the position. The other option is, of course, to just buy it at 506, and if it drops to 5, no big deal. Again, don't get so hung up on the exact numbers, and don't get so worried about having a small loss in the beginning. I think a lot of new traders get very, very nervous about this kind of thing. It has to be the exact price that they wanted to pay. They can't take a loss. They have to be right. And I think a lot of traders get out of these positions way too early. One thing we might see as an example is someone who gets in at 506 and then watches it drop to $5. Just because a stock hits oversold doesn't mean that it's going to immediately go back up. It can hang out in oversold territory for minutes or hours or even days. We can't get hung up on that. We got it at 506. It's $5 now. I think a lot of new traders panic and they go, oh no, I have a loss, sell. And they get out without realizing that sometimes stocks need to pull back a little bit more to attract more buyers. Maybe it's in oversold territory for a little longer. It's okay. Don't freak out over this stuff. That's why it's important to have a plan. How much are you comfortable losing on this stock? Now, you'll hear from time to time people on, like, say, YouTube or Instagram or TikTok, they'll argue over whether you should be focusing on a dollar amount loss or a percentage amount loss. Day traders and swing traders tend to stick to around, say, 3 to 5% for their losses. Some go as high as 7. I've even known some people who have really high risk management. They'll go all the way to 10%. I don't like to go that high if it's a volatile stock that I'm not familiar with. If it is a stock that I'm familiar with and I know that it can pull back significantly before rocketing back up, maybe I'm a little bit more comfortable with that position. Maybe I can suffer through a little bit more of a loss than I would on other stocks that I'm less familiar with. But you'll hear people say, I'm getting out if I lose $150. And someone else will say, $150? That's stupid and you're stupid and it should be percentage. What percentage amount are you willing to lose? At the end of the day, forget all of them. You have to do what's comfortable for you. If for you it is a dollar amount that you are not comfortable losing more than, then you do it. If it's a percentage amount, you do it. For me, it's both. Why? Because I'm really, really bad at math. And I don't feel like sometimes sitting there, I can just eyeball a stock and go, okay, if it goes down to, I buy it at 5 and it drops to 485, I'm out. I've lost $185. Is that math right? I've lost $150. That's how much I'm comfortable losing on that trade. Now, I've done the math just for this video, which turns out that is about 3%. That's what I'm comfortable losing on a trade like this. 3%. Maybe a little bit more if I'm familiar with the stock. But generally speaking, I know in my mind I have purchased it at $5. If it gets to 485, that's where I pull the plug. A lot of new, inexperienced traders get out too soon. They're shortchanging themselves, right? They buy at 5, it drops to 495, and they go, I'm out, and they panic and they sell. And then what happens, right? I see this all too often. I sold, and then it shot right back up. Well, a lot of the time, it's because new traders aren't aware of technical analysis. They're not looking at the relative strength index. And so they get out because they panic, because they have a loss and they don't want to lose, and they end up shortchanging them. So they get out too soon. Stocks need to pull back. They get out too soon, and then it rockets back up. That's something that can be fixed by having a plan, by having risk management, and by looking at the relative strength index and all your technical analysis, the volume, for example, to see how these stocks are faring as they're pulling back. You can make decisions on the fly. Now, for the sake of this video and for easy math, let's just say we got very lucky and we bought it at exactly $5 a share. Here's another hypothetical for you. It continues to drop lower. But you realize the reason it's dropping lower is because your timing was off. You had a number in your head. I'll buy it when it's 5. and you saw 5 and you bought. But what you didn't do was look at the relative strength index. And what do you realize? You aren't even in oversold territory yet. Shit. And that stock continues to drop. Now what do? Do you take your original planned loss of $150 if it gets to $4.85? Or do you reevaluate? And do you tinker with your plan a little bit because you made a mistake? It happens. We make mistakes. Do you reevaluate and say, oh, I bought too soon. I might end up having to take a bigger loss than expected because I'm not even in oversold territory yet. I want to wait till we get to oversold and then I'll decide what to do. And if it drops even lower, then you get out and you take maybe potentially a $200 loss, which is more than you wanted. Or do you say, nope, my plan is my plan. I got in, I wasn't looking at relative strength. I bought too soon. It had more room to go lower. It went lower. I'm not revising my plan here because I don't want to lose more than I had planned. I'm out. Again, it's totally your call. If that kind of thing happened to me, I would probably say, I goofed. I'm going to hold a little longer because I want this stock to enter oversold territory, and then I will make my decision. So I might end up sitting on a bigger loss. It happens. If you don't want that to happen, then you stick to your original plan and you say, oh, my timing was off. That was my fault, and I'm going to take a loss. That's also my fault. Oh, well. You might find that the stock goes back up after that. That's trading. It happens. Now let's say this stock, we've purchased it so we've gone over the first scenario, which is we purchased it at 5 or whatever, and we ended up taking a loss. It dropped to 485, and we sold, and we took a loss, and on to the next one. Now let's say we purchased the stock at 5. Again, I'm going to keep it at 5 for easy math, and we've got a target price of $5.30. As that stock starts to turn around and move higher, again, it could take days. It could be a day. It could take days, or it could take a week. Let's just say, for the sake of this video, that we purchased it on Monday at $5. On Tuesday, it's $5.10. On Wednesday, it's $5.15. And it climbs higher throughout the course of the day. But it doesn't get to our goal of $5.30 yet. And then on Thursday, it drops all the way back down to $5.10. Oh, that sucks. But we're still profitable. We're still profitable. Now we have a couple options here. Option one is we can say, you know what? I think this thing is reversed course. It broke out to the downside. It cracked that support line and it's pushing lower. I'm going to take my very small profit here of say $100 and I'm just going to get out. Option two is I'm going to hold until I'm at break even at $5. Then I'm out. I make nothing. I lose nothing. Option three is I'm going to let it get back down to its previous support of 485 and make an evaluation there. You might end up eventually losing money on this trade or not. You have decisions to make. I, in this situation, would hold. Why? Because I have experience as a trader. I've got risk management. I've got, I have a little bit of, I'm not as nervous as new traders when it comes to losing money. Losing money is part of the game here. I have the ability to say, you know what, I'm okay with taking a little bit of loss. I'm okay with letting this ride out a little bit longer. Let's just see where it goes. If you're nervous and you think I have a profit, I'm taking the profit. That's what I'm comfortable with. Whatever you're comfortable with, you do. So, going along with what I would do, I would hold. Now, guess what? It's Friday. Week is almost over. We wake up, and what do you know? The stock is on a tear. It's 510 yesterday. It's all the way up to 525 and climbing. What do? Do we panic and immediately sell? Or do we look at the news and the charts first? I'm looking at the news and I'm looking at the charts. Now, maybe this company had really good earnings. Maybe the economy had really good news. Maybe the sector that company is in had really good news. Maybe a competitor had earnings that were really good. When competitors have really good earnings, it sort of acts as like a little bit of a foreshadow that, hey, if this company had good earnings, yours might too. So what you do is you look at the news first. Let's say there's some news, and let's say it's really good news. That's great. Now let's say that we go back to the chart and it's not hit overbought territory yet, and it's got very high volume, so the stock continues to move. Not only is it continuing to move, but we've surpassed our goal of $5.30. Are you going to be literal and say, no, my goal was my goal and I'm taking my profit? I made 300 bucks and I'm out. Maybe it's $5.32. Maybe it's $5.35. Whatever it is, it's a little bit over your goal. Do you say, nope, I stick to my plan? Or do you revise your plan based on the news, based on the charts, based on the volume? I revise my plan. Here's what I do. I let it ride. I let it ride and I'm keeping my eyes glued on the relative strength index, because the second that stock gets into overbought territory, that's when I decide it might be time to make a decision. Or if the volume starts to taper off and it gets closer and closer to that 20 moving average, that is the middle of the Bollinger Bands, right? There's the resistance, there's the middle band, and then there's the support, the bottom band. The middle band is the 20-day moving average. As long as the stock is on the positive side of that moving average, again, I have videos on that. Maybe I'm not selling. Maybe I'm just going to let it. It's going to come back down. It hits that 20. It maybe goes higher. We don't know. I've got options here, is the point. Option one, I can just let it ride. It's going to go. It's going to do what it does. When it gets into overbought territory, then I can decide to sell. Option two, I can say, nope, my plan was my plan, and my goal was to make 300, and I'm at 350 bucks. That's $50 more than I wanted. I don't care. I'm sticking to the plan. I'm out. Option three, you can always sell half, lock in some gains, and let the other half ride. Let's also not forget that in this scenario, we are on a Friday. And I don't usually like to hold volatile penny stocks or stocks that I'm trading over the weekend, because my thought is, if it's in the middle of the week and it's really hot, it can continue to pick up steam and momentum as the days go on. If it's the weekend, things happen over the weekend. People lose interest, momentum slows. Maybe I just want to take my full profit and get out. That's always an option. I can take my profit and get out. Now I'm watching the stock. Let's say it hits $5.40. I've made 400 bucks. Even though my goal was 300, I've made an extra and I'm out. At that point, it's overbought, and I think it's slowing down. Volume is reversing course here. I'm out. I'm taking my gains and I'm moving on. I've made $400 on this trade. Now, remember, my goal was to make $1,000 for the month, and I've on one trade made $400, $100 more than I was expecting to make. So what do I do with that $100? Right? It's a bonus. Am I going to go buy some champagne and caviar? Or am I going to go get a pair of new shoes? Or am I going to piss that money away, in other words? Or am I going to, and let's say in this scenario that I need to trade to make money to pay bills, right? That 300 was going to go to my car payment or my condo fees or my mortgage or whatever. I have now gotten an extra $100. Am I going to piss it away and be irresponsible with it? Or am I going to use that money? Am I going to say, hey, that's bonus money. I can put that extra 100 towards some high quality investments, or towards my mortgage, or towards my rent, or towards some bills. Or I can use that $100 and put that 100, I can take my 300 profit and put it into my bills. And now I can trade with $5,100 because I got a little bit more than I was hoping to get. You got options. Now, the last point here on this whole $5 stock that runs up to $5.45 is when you decide to sell it at $5.45. And let's say in this scenario, you say, you know what, my goal was to make $300. It's $5.45 now. I've made 450 bucks. I could sell half and I can let the other half ride, but it's Friday. Maybe I will sell the whole position here. It's $5.45. It's oversold. It's Friday. For all those reasons, I'm cashing out. I'm taking my 450 bucks. Now, what do you notice that happens after you sell? It keeps going up. This is when you as a trader have to go, oh, well, my goal was 300. I made 150 more than I wanted to make. That's $150 more that I have to put into my long-term investments or my ETFs or my mutual funds or my mortgage or my bills. But a lot of new traders get upset and they go, fuck, if I had just waited, now it's $5.50. That's okay. It's the exact opposite of, when we were talking earlier in the video about buying the stock at $5.06, and then we buy it at $5.06 and it drops to $5 and we're like all upset. Oh no, I have a $60 loss. It's the same thing in reverse when you sell it at $5.45 and it goes to $5.51. It's only $60 more. Don't get so in the weeds over this, because then you're going to drive yourself nuts. That's the real issue here, is we're going to drive ourselves crazy over trying to get the perfect and the most, and it has to be the top, and I have to buy at the bottom, and I have to sell at the top, and I have to make the most amount of money, because when that happens, we end up making reckless and poor decisions. One of those decisions we make often is to chase back in. We get back in because why? We're greedy. Look, man, you already made 150 more than you wanted, and you're going to be greedy now? Your goal is 300. You made 450. Be happy. Nope, you're not going to be happy, because now it's 555. Oh shit, now it's 560. What are you doing? You're panicking. Should I get back in? I want to get back in. And that's when you stop paying attention to the technical analysis, and that's when you make an impulsive and risky and stupid decision. And what often happens in these kind of scenarios, I hear about it, I get DMs about this on TikTok all the time. I bought it at this, it went to that, I sold, it went higher, I chased, I got back in at the very tippy top, and then it dropped, right? It's that old ball metaphor. I used it before. If you have a ball and you throw it into the air, the second it leaves your hand, it's picking up speed until it gets to a point, right, where it starts to slow down, and then it reverses. And what usually happens is that's where they're buying. At the very top, they enter back in, they buy back in all the way at the tippy top, and then it drops. And the longer they hold, the more they're eating into their profits. But what happens? They can't be wrong, because they had a $450 profit. And then they were greedy and they chased, and it's eating into that $450 profit now, right? Now it's a $400 profit. Now it's a $350 profit. Now it's a $300 profit, because they're taking a loss as that stock is dropping. It might come back up, right? But might isn't a strategy. That's why I don't recommend chasing. That is also why, as a trader, I often say when you hit your goal for the day or you hit your goal for the week, you walk away. I'm done. I hit my goal. I'm out of here. I'm going to go on a walk, or I'm going to go on a 3-day weekend. I'm going to get in my car. Hey, maybe you sold that stock early in the morning. Woohoo, 3-day weekend. You're done. Stop looking. When you look and you keep watching, that's when you're going to drive yourself nuts. And there was one other thing that I wanted to say, and I wish I had written it down, because now I can't remember. I want to talk about not being too literal. If you're too literal, you'll never make any trades, right? Because you're going to be waiting for the most opportune time. Your stock, for example, might not have done that. It might have gotten to 525. And if you are determined for it to be at 530, you're never going to be selling, right? Because you're sitting there going, no, it has to be 530. Well, it's 525. That's close. That's close. You round up. We round up here. It's okay to round up. And so let's say you have 2 trades. That's what I was going to say. Let's say you have 2 trades on the whole month and you make $800 or $900. A lot of traders tend to get really stubborn and hyper-focused on it having to be exactly like their plan said. I had to get it at 5. I had to sell it at 530. I have to make 1,000. And what we end up finding is that a lot of traders get so in the weeds on being very accurate. It has to be exactly like I said it has to be, that they end up never making plans, and they end up making impulsive decisions. Look, you made $900, right? Let's say you made another trade a week later that did the exact same thing, and you have now $900 in gains, and your goal was to do 1,000. Hey man, we round up over here. You did it, right? You did it. You hit your goal. Your goal was 1,000. You hit your goal. You did it. Fantastic. You hit your goal. You made 900. It's close. It's basically 1,000. Don't worry about it. A lot of new traders, they get like, whoa, I'm $100 away from my goal. I'm gonna start, and they start being reckless because they're determined to make the exact amount that they set out to make, and that's when traders get in trouble, because they abandon their plan. They abandon their plan. They abandon their strategy. They increase their risk tolerance, or their ego gets really pumped up, and they go, oh man, I made 2 really successful trades, so my next one's gonna be really successful too. And when it starts to go south, what do they end up doing? No, I can't sell. I have to be right. I have to be right. I can't be wrong. I gotta make $1,000. And before you know it, they got $100 loss, $200 loss, $300 loss, and that's eating into their gains. It's eating into their $900 that they've already made. So now they're further and further behind. It's like Monopoly when you have to take a step back or 3 steps back. Oh no, and then you get nervous, and then you get panicked, and then you sell and you take a $300 or $400 loss, and then you start like revenge trading, right? That's not good. You gotta like develop some risk management, number one. You have to leave your ego at the door, and you have to be okay with not being right on every single trade, but you also have to not be so literal and so hyper-focused on your goal, right? Because when you get that way, it gets risky. That's when you start abandoning stuff because you think that you're better than you really are. And I don't mean that as an insult. I mean that as the reality. It happens to all traders. We have a couple trades, and before you know it, we think we're hot shit rock and roll and we're invincible. And that's when we abandon our plans, and that's when we get hurt. So can you make $1,000? Can you side hustle trade? Of course you can. Is 1,000 reasonable? Of course it is. Now, one last thing, because I want to make this video kind of brief and I'm already running a little long here, is people tend to think, I have to buy the cheap stocks. I have to buy stuff under $5 because that's where I can make the money. That's where I can buy 1,000 shares. When I have 1,000 of something, I can make more when the stock goes up. But don't forget that you can do this exact same thing with a $50 stock. No, you're not buying 1,000 shares, right? And that's where I think a lot of new traders go, well, I'm only getting 100 shares. I don't want to do that. But it's the same percentage increase that we're talking about from a stock that goes from $5 to $5.30 for a $50 stock to go to $53. It's the same percentage increase on 100 shares. So instead of buying 1,000 at 5, you're buying 100 at 50. And when that stock hits $53, you sell, you've made $300. Or it continues to run and you sell it at $54.50. Or it starts to drop and it hits $48.50 and you lose $150. The numbers all work out the same. So don't think that you only can be buying penny stocks. You can do this with any stock that you want. $50 stock, $5 stock. You can trade anything. You can trade McDonald's. You can trade Microsoft. You can trade some random penny stock if you want, although they come with higher risk. Because they're the ones that are most prone to being pumped and dumped. And another thing that I guess we should mention is I have a lot of traders coming to me going, hey, I bought the stock because it was up 200% on Monday, and now it's down, and I don't understand why. It's a pump and dump, dude. You bought it at the very, very top. So, can you swing trade as a side hustle? How to make $1,000? That's what this video was about. If you thought it was helpful, if you liked it, if it made sense, please hit the like, the subscribe, the little bell thing. And if you don't know all the stuff that I was talking about, like support, resistance, Bollinger Bands, RSI, I got tons of videos for you to watch. That'll put it all into perspective with actual visuals. I'm sitting here in my living room. I don't have a dry erase board to do all that kind of stuff. So there you have it. Thanks for watching. Enjoy your weekend.